I'm Charlotte McLeod with the Investing News Network, and here today with me is Charles Cooper, Head of Mine Economics at Metals Focus. And we're here right now at the Denver Gold Forum. Yesterday you gave a keynote presentation on the outlook for gold mine supply over the next few years. One comment you made that really interested me is that major miners are losing market share to junior and intermediate producers. To what extent is that happening? Do you have any numbers that we could go over?
Well, I mean, when you start looking at what's happening in the resource space, certainly from the gold mining sector, the majors which account for sort of Newmont, Barrick, Newcrest, the usual names that people tend to have in their sort of gold portfolios, they are sort of cutting back on production. They are sort of divesting some assets, so that's leading to, obviously changing production profiles going forward, so lower production. And many of them aren't really developing many projects, certainly in the medium term, which is sort of out to 2022. Beyond that, they have some greenfield growth that they could bring online. But what's happening is, because their production profiles are declining, and you can look at the company guidance, to corroborate a lot of that, and, the notable key companies like Barrick, like Newmont, are negative growth over the next few years. And that basically means the sort of share of world gold supply that they are accountable for, and currently, or at the end of 2017, total gold production was roughly 105 million ounces, or 3,304 tons. The gold miners were basically sort of, the majors were, and over the last 10 years have been having a decreasing sort of share of that. Basically, what's happening is you're sort of seeing growth coming in from the intermediate sector and the junior miners. And these are the miners that are sort of small scale. So you can go all the way down to the artisanal mining sector. So you're sort of seeing hotspots of activity in certain African countries. And so there's an increase coming from there. There's been an increase in gold output, a substantial increase from China and since 2010. And obviously that's sort of fallen off a little bit over the last 12 months or so, as the Chinese have introduced sort of environmental cleanup plans. And that's basically meant that many operations are suspended or closed. But that's where the growth's come. It hasn't come from the majors. So the question I suppose you would want to ask is, why would I be investing, or why would I want to look at the major mining companies if their production growth is falling, if the gold price remains stagnant, perhaps at the same levels as we are today, or even just a little bit higher, and they're not returning much money in terms of dividend or share buybacks to the investor community? So why would I want to go into that sort of area? And the answer is, well, maybe longer term you look at that as a stability factor, as you might want to put your money in long-term stability. But at the moment it's fairly unattractive.
Right. So what is the solution? Should majors be making corrections to what they're doing, or should investors change what they're doing and start looking at those smaller producers?
Well, it depends on investors' perception on what the gold price is doing. And of course, that is all tied intrinsically to the US dollar strength at the moment in relative terms. And that's putting a little bit of pressure on, and obviously, the Fed increasing rates potentially later this week, and again maybe later in the year. So that could have a bit of a quietening effect on the gold price. So what can majors really do? And that's going to be an interesting question, from the community. And I think what's going to happen is that you start to see portfolios being trimmed down. You'll see more asset disposals. Some of these majors still have quite high debt on their balance sheets, from the sort of largesse of the last 10 years of growth and expansion, and really bringing on very expensive projects at the peak of the cycle. So if you sort of think about where we're going in the next few years from the majors, and certainly from the junior mining sector, we'll probably see the junior mining sector picking up some of the asset divestments. So that's going to be interesting. But that doesn't really give you growth. It gives you growth for a company, but not for the sector. But I suppose the other sort of point to make here is that there is a possibility that you could put a framework around the major mining companies and say they're looking to downsize or right-size themselves in order to create growth for the future. And we're not there yet. And obviously with the merger between Barrick and Randgold, if you look at their combined production growth on a pro forma basis, it's slightly negative for the next few years and then comes back to roughly the same level as today. So from a production growth point of view, that isn't the story.
That Veragrande Gold deal, is that good for the gold industry? What is your thoughts there?
For the gold industry as a whole, I think it is. It's a shot in the arm that the industry needs. It's showing that M&A activity can happen, and it can happen in a way where you can have a sort of shake-up of an old-style, massive company like Barrick Gold, and you can start to sort of see that, you know, someone with the charisma and the charm and the dedication that Mark Bristow can bring in from Rand Gold, having created that company from obviously sort of the spin-off in the Rand days many, many, many years ago. And his style of leadership is about keeping a company lean and mean, reducing costs, making sure that they're much more competitive. And ultimately, he wants to return shareholder value. And I think that shake-up, and it's going to be a big battle, I'm sure, in the boardrooms of the Veragrande Gold stable, will be something to watch. Actually, will probably be very interesting to watch.
You mentioned price a little bit. Where is the gold price in all of this? And this deal, some people have been saying maybe it's in anticipation of higher gold prices. Where do you see us at?
Well, there's a lot of headwinds currently at the moment. We talked about some of the US dollar strength, and obviously at the moment investors generally are considering or favouring US equities over gold. Part of that's been driven by, there's the other drivers to that are sort of trade wars, which are obviously creating a little bit of uncertainty out there, and that's putting a little bit of pressure from other international sort of forms of investment. Going forward, and perhaps over the next few months or so, we do sort of see that there is a potential for gold prices to come off where they are at the moment, around about $1,200 an ounce, and rise a little bit higher over Q4 going into the early part of next year. Part of the trigger for that is going to be the unlocking of some significantly high net short positions on the futures market, coupled with potentially some inflows rather than outflows from the exchange-traded products, the ETF market, which is what's been happening over a few months, and that's causing a bit of some of the reasons why the gold price has fallen. But we need some form of sentiment, some sort of trigger in order to make the gold price go higher. And typically tensions, the prospect that the US dollar might fall, perhaps the US economy's got a little ahead of itself in terms of sort of growth. We're sort of starting to sort of see peaks in both all of these sort of trends that suggest that we are not necessarily at the top, but we must be getting kind of closer to that turning point, and that will all be potentially good for the gold price.
One thing you mentioned yesterday is you see gold supply increasing this year, next year, and then flattening out to 2022. However, and this is a fun topic, you're not a believer in peak gold. Can you explain how you think about that?
Well, a lot of it is about the market in the past, perhaps giving too much attention to the majors and their growth portfolio. And obviously, as we've discussed, they're seeing that is starting to sort of decline over the next few years. And there's obviously a few exceptions like Goldcorp and Yamana, and Polyus and Polymetal, all got reasonable growth projections. But in terms of the peak gold supply theory, is that we are getting to a point where we might start to see a decline in global supply. And one of the reasons why we think that might not necessarily happen, or at least it won't be precipitous beyond our current forecast range, which is 2021, which is when we do start to see that downward trend, is that there are a number of very large-scale mining operations owned by the majors, but also owned by the mid-tier section as well, that have substantial resources that could potentially extend the mine lives that are based on proven and probable reserves. So that could add 2, 3, 5, 10 years to the current sort of projections. That basically pushes out the profile. It pushes out that decline a bit more. And then there's the activation of greenfield projects. We're sort of seeing that there's at least 3 million ounces of new projects being built in construction and at advanced sort of feasibility stage to be developed over the next 2 to 3, 4 years or so. And those are all being driven by the junior mid-tier end of the market. there's only one major name in that, and that's Gold Fields. Mm-hmm. So broadly what we're sort of saying is from the mid-tier and the junior end of the market, we are still seeing substantial growth, 5-10% per annum increases. We're seeing significant increase in gold output from Russia, and a lot of that is from a political, perhaps, agenda where the Russian government is helping relax some of these sort of the mining sort of fiscal terms, giving long tax holidays on to projects, and also helping to develop the infrastructural, big infrastructural needs in certain remote areas of Russia to actually develop some of these big deposits which are coming online now.
One final question on jurisdiction. We've seen quite a few Australian companies here. I feel like there's buzz growing around that. You mentioned Russia as a jurisdiction where gold is coming from. What about Australia? Is it an area we should watch?
Absolutely. Gold exploration in Australia is now at a 20-year high in terms of expenditure. And while we're not actually sort of seeing significant resource announcements from Australia and Australian junior exploration companies today, we would expect to sort of see that unfurl over the next 12, 18 months or so. So expect more resource announcements. We are starting to see some interesting deposits like Novo Resources, turning back the clock 3 billion years to look at what the world looked like then. Bits of the Pilbara today in Australia were attached to bits of South Africa. And so there's a similar geology, a sort of a reef system, where they're looking and tapping into potentially, the sort of similar gold mine deposits that you get in South Africa, those huge deposits. And so if they can unlock that, and there's other examples in Australia, that may very well turn out to be the next big thing.
Okay, that's great. That is everything for me. Thanks so much for joining me. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Charles Cooper with Metals Focus.